Good morning, everybody. Today is finally Friday. October is almost gone. 2024 also is almost gone. Uh, October 25, 7:34 a.m. Eastern Time. Let's start this morning call video with a quick disclaimer. As usual, I only express my studies. I'm not a financial advisor. Future stocks, cryptocurrency, and options trade involves substantial risk of loss and is not suitable for all investors. The valuation of future stocks, cryptocurrency, and options may fluctuate, and as a result, investors may lose more than their original investments, especially if you are leveraged. I like to say always, be careful trading zero DTE. Remember, you guys need to know the basic in options to trade options. You guys know that we have theta, that's burning delta. Delta accelerates movement. Gamma is exposure. Levels are to be respected. Doesn't mean that the level will not be breaked up or down. Flow is to be respected. If you are in a sell pressure environment, be careful if you play long. If you are in a buy pressure environment, be careful if you play short. Right? Work with stops. If your market didn't give you the direction, don't trade. Don't do anything. What's happened with me yesterday? 2 days ago. I enter long. I get a lot of profits because market opened with a 25 points gap. I close in the pre-market is almost 100% profit. You guys saw. I opened a very small hand. I bought call. Was like 0.50 DTEs. I'm sorry, 0.50 deltas, right? And I guess the delta will jump to 78 or was 0.3 deltas and jumped to 0.5. That gave me 100% profit. I closed. Yesterday I tried to open on the long. I wasn't wrong. Look, future right now, right? But in some points, theta burned some deltas, right? From me. What I did, I stopped myself. And remember what I told you guys, we cannot lose more than 10% for your previous trade. Build a strategy. I always put in the close group. Greed kill people. Build a strategy for profits and for loss, stops. Don't trade every day. Don't overtrade. Don't put sentimental. Market is operated by machines. Market is ad eternum, is forever. So, majority of the times, do nothing is better than do something. That's the message of today. That's my 2 cents. Summary of the market structure document. VolSky is not providing us clear visibility how we open today, tomorrow, right? Different than yesterday. On Wednesday, VolSky show us a gap up at the open. Today is not showing nothing. So those 13 points gap up that future suggested could you be given back up to the open, right? And open flat. I'm not guaranteed that, but I'm just telling that VolSky is not suggesting clear, if you will open with a gap or not. Tendency is to open flat, right? Per volume, we open in a buy pressure. We will open in a buy pressure region, since puts are in dominance below 5,805, exactly where is located the VolSky support. So, for today, 5,805 could be the floor per VolSky per yesterday book where they set up, puts in dominance right below. Open intelligence suggests that tomorrow we will not trade below 5,800. Okay, so those spikes below 5,800 tended to be gone, at least today, right? We saw on Wednesday, right? Market trading at 5,760, 61, 62. And yesterday we break down again 5,800, but we recover it right away. So today, Open Intelligence suggests that we will not trade below 5,800. So tendencies to see a bottom. So the intermediate bottom tended to be in. But if you analyze Elliott wave, per Elliott wave to, and also per graph, everybody's calling XPX at 6,000 or above 6,000. So this correction supposed to be go a little bit further, not up to 5,606. The idea is to go up to 5,600, not 700, 650. Then we will get gas, right, to go up to 6,000. But we go through this during this morning call. As I sit in the first page of this document, Vega suggests lower volatility today. So Vanna tended to be bullish. Lower volatility at the open, bullish Vanna by pressure. Remember that we close above 5,805, so the tendency at the open to see by pressure. Especially because Vega suggests lower volatility. So Vanna tended to be bullish. 5,810 is the inflection point for the upside. We are already above 5,810. Breaking it, the tendency is to backtest 5,810 and 30, right? Could be pretty, but DEX, Delta Exposure, show me resistance 5,820. Closing around 5,825 is the tendency. We tend to close around 5,825 or a little bit higher. Since puts are in dominance and such strike, if you close in such level, dealers will collect all the premiums that are in the table. Okay? So economic agenda today is not too busy. It's not too busy. Vol skill, as I covered in the summary, suggests 5,805 as a support. But open interest that is also covered in the summary. The tendency to see XPX trade above 5,800, possibility to close above or at 5,825 for premium collection, also covered in the summary. Let's compare now yesterday open interest in the left side with current open interest for today in the right side of the screen to see if you see some difference between yesterday and today. The main difference is 5,850 that before I highlighted with a red arrow, right, puts were in dominance. Now calls are in dominance at the level. So maybe they close some contracts. Suggestions, they remove, resistance at 5,850. So if you break 25 and 30, 5,850 could be the target, right? They remove a lot of resistance from 5,850. A lot of puts were closed. 5,900 is still where calls were concentrated. Maybe they sold those calls, guaranteed that they sold those calls to finance or their hedge or their setup for a gamma squeeze, right? Because we enter in a negative gamma territory. So the major difference was 5,850. Pay attention, note that at 5,830, 5,820, puts is still in dominance, but not as before. Just look the size of the gray bar is slightly lower now, right? So people have been closed their puts. 5,820 now, as also said in the summary, tends to be the resistance, the first level of resistance. Breaking, we need to look for 25, 30, and maximum upside target 5,850. Calls start to be in dominance. But open interest right now, pay attention that calls start to be in dominance above 5,840. Okay, so the inflection point to go up to there, first of all, is 5,820. If you break 5,820, calls are in dominance, we have two resistance, 25 and 30. Right? The tendency to see a squeeze. Why? Because if you are holding negative delta portfolio, you're supposed to be close and buy delta 1 to neutralize deltas, making it easy to break and backtest 5,840. Okay? So 5,840 calls start to be in dominance for open interest. We tend to see buy pressure and take us at least to 5,850. Could we go higher? Why not? Everything is possible. Per volume, we don't need to compare volume because volume is per market. Pay attention that above 5 is slightly different than the open interest, and also make totally sense because now we are trading around 5,825, right? So those that holding negative deltas at 5,825 and 30, as you see over here in the open interest, they need to neutralize delta. So it's totally normal to see much more calls being bought above 5,820 than puts, because they need to neutralize for those that are holding negative delta portfolios. That's the systemically, right? If you know, since futures already take us there, the tendency is to see buy pressure, lower volatility, as I covered in the summary in this market, in this morning call video. Okay, so pay attention that per volume above 5,820, we have calls in dominance, and we have a big call wall located 5,850. Okay, tend to act as a magnet. We could go back there. Vega suggestions volatility being suppressed at the open, and JAX was moved to 5,850. Gamma is pushing us back north, not south. Okay, the tendency of to see the reversal of the flow getting bullish again is almost 100%, right? I explain people in the Twitter, because when I told you I'm playing long, some people just, wish me luck. I said I don't need luck, I just need to understand the book, to see the systemically of the book. If the systemically of the book is telling me that you go up, I open long position, right? Let me see my answer and I'll show you guys. If I didn't find it anyway, that's fine. Oh, was here. The guy suggests good luck. A lot of volume at 5,600. Everybody was looking for 5,600. But I asked him, look at the Vega design. Vega is really important. Gamma is allocation, delta acceleration, Vega volatility. You have a bunch of things that you need to look for. Okay? So you guys know that I already close. I open another long, I get stopped, because this is the way that I trade when I trade. Right? But anyway, I already explained all the systemic and all the levels over today. Right? We could go and back test 5,850, yes. Above 5,820 per volume, calls start to be in dominance. 5,825 is a key level. 5,825 is a key level. XPX trading above 5,825 and holding. The tendency of to borrow is in intermediate borrow is almost 100%. To change bias, let me use this word bias, that's not the correct one. Bias only above 5,850, and 5,850 start to be the support. Okay. So far, if you go back to the no flow trade, 5,825, 5,850, I suggest caution, because I don't know if they are distributing or accumulating. But let's go back to the market structure document. Let me use the full screen, and let's go to some Elliott waves patterns. Let me put more than 100% so you guys can see clear. So per Elliott wave patterns, we have 5 waves. The fourth one is not too huge. It's not a big drop. It's a small drop. But as I told you guys during the summary in this morning call video, to see XPX going up to 6,112, 6,060, to backtest sub-trend lines, the correct thing is to see a correction up to 5,648, as I told you guys, 5,700, 5,650. Backtest a pivot, backtest the previous all-time highs to get impulse to go up to there. But if you use Fibonacci, this is one of the short-term Fibonacci. But I already show you guys a long-term Fibonacci start back in 2009, right? Using Elliott wave pattern since 2009, right? Suggest me some levels. One is 5,930, another one is 5,960, and another one is 6,112. So those are the levels that per Elliott wave using annual graph and consequently Fibonacci to project top end of the cycle. Those are the regions. But you guys know that I like to monitor the flow. We have a flow up to 5,950, and if you use a short-term Fibonacci and use the Elliott wave pattern, if this meltdown goes only up to 5,762, you guys know that I posted this in the closed group before it happens. Just look at the candle. The candle wasn't up to 5,762, right? So I posted this to you guys, and if you guys see, the bottom of this week was 5,762.47. Per this short-term Fibonacci, the 78.6 was located at 62.57. Almost 100% accurate, right? Almost 100% accurate. So if you will hold over here at 78.6, I was looking to backtest 61.8, right? To see a melt up above 5,900, going at least up to or nearby 6,000. But if you hold at 78.6, the tendency to see this last leg up, the wave 5, going up to 5,950, 5,936, 5,980. Remember that I told you guys we have flow up to 5,950. Anyway, this wave 4, I cannot guarantee that it's already in, as I told you guys before. If we not close above 5,825, again, if you not close above 5,825 and 5,825 start to act as a support, we could see the correction still ongoing, and then we could backtest 5,700, 5,650. If you go up to here, now we need to go back to the annual graph, and because we have enough impulse to bring above 5,950, and could you go up, nearby 6,000 or maybe 6,060 per Fibonacci. So far we have a flow up to 5,950. Okay, some small players also roll over above 6K, but the majority of the flow was roll over up to 5,950. Okay, and if the body is in, if you see a confirmation that the body is in, per Fibonacci, the destination, the 100%, is 5,940, 36.79 to be exactly. Okay, gotcha. This is the Elliott wave pattern. This is pure speculative, but we have flow up to 5,950. Okay, since regarding crash, I know that a lot of people is looking for a major top in 2026. I'm not saying that this is not going to happen, but per graphical pattern, the tendency to see the top is this year, right? And some point in next year, also per graphical pattern, I don't have flow yet to monitor next year. I don't have too much information, right? But per graphic pattern, the top tends to be this year, and we tend to start to see turmoil next year. Could you be January, February, March, April? I don't know when. But I also explain here through the Elliott wave, because in the Elliott wave, for those that like Elliott wave patterns, basic and also those that like graphic figures, in the Elliott wave pattern, basically 1, 2, 3, 4, 5, and then the ABC form a head and shoulder. The Elliott wave, when we start to see the corrective, the market will leave a head and shoulder pattern. So usually you see the first corrective that you call leg A, right? That's not a big leg, but we tend to see a lot of volatility. And then we have another melt up. Usually crash happens in the B phase. Okay? Usually crash happens in the B phase. It's because we have euphoria over here, this kind of panic over here, and then the euphorias went back. We will not backtest the previous all-time high, but we tend to go back to the last all-time high that was 5,878. Okay? And then usually we tend to see bunch of people just buying back, look for a new highs. And in this wave, in this leg, usually is when you see the famous crash, the crash that people is looking for. And then will be the leg C. That's the strongest one per Elliott wave. So again, regarding top, I provide you guys some levels. Doesn't mean that you will be the top. I provide, Fibonacci, right? And special 5,950 is because we have flow up to there. Okay? It's based in flow, and 36.79 based in Fibonacci and Elliott wave. Okay? We always reevaluate this every single day through the closed group. Right? Anyway, since I already covered this, let's take a look in some assets that a lot of people is bullish, and I'm not. And other items, assets that I'm bullish and people's not. I'm very bullish in TLT. Everybody is calling for US default. Government expand, nobody will buy debt, and blah, 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 blah. I understand that. Of course, we need to have like some panic regarding that. But nobody in the world wants United States entering a default. Because if United States enter in a default, guys, everybody will be homeless. The only millionaires that you see will be Elon Musk, John Bezos, blah, 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 blah. Maybe also them getting risk. Maybe also them is getting risk. Right? So this is not going to happen. Could happen, but not officially. What happens in a recession? Everybody is looking for, I will buy Bitcoin, I will buy commodity because all the money will flow to commodity in Bitcoin. First of all, Bitcoin is useless. People still not understand. All the Bitcoin still not understand that Bitcoin is useless. It's a pure hype. And second one, commodities, as the name said, is commodities. If you enter in a recession, commodities will sink. Why? Because the US dollar will spike higher. Everybody say, no, dollar will collapse as soon US enter in a recession. No, US dollar will go higher. TLT, US Treasury will go higher. And the recession that we tend to enter is supposed to be the worst recession ever. Because everything is in all-time highs, even the debts. The general society are in debt. Even the rich are in debt. But they are another part of the equation. But the entire society is in debt. Who has your how many percent of the population has your own house? Maybe 10. I'm glad that I'm inside of the 10%. I don't have mortgage. But 90% has mortgages. Imagine if you bought an apartment by $500,000, we enter a recession, the rate is still higher, the unemployment starts going up, you lose your job, and consequently the face value of your property starts going down, going back to 300k, 250, and you have a mortgage paying the principal as $500,000. What do you do? You enter in a foreclosure, right? You guys understand the situation? And if you guys go to Zillow or Hilton, whatever, you see the history of the price of every property. I have a case. I also already post, I guess in our closed group. I need to find out, but I don't want to do this right now because it takes time. Or also I guess in the Twitter, and I sent to some friends. Some people just bought their house back in 2023, all-time highs, apartment they bought by $2 million. The person that bought prior this person bought by 800,000 and sold for 2.2 million. This person that bought for 2.2 million is trying to sell. He started to try to sell for $3 million. No offers, no visits. Now is 2.7. It's getting down. The HOA is getting up. The insurance is getting up. So looks like people that was really looking to sell, but we don't have buyers. Not buyers, sorry, buyers. Right? I also have a case of a friend that bought a house in Texas. He started to sell. He moved back to Miami. He's paying a high price of rent. And also he dropping the price. He's my friend. He's Brazilian. He's dropping the price. He put a lot of money to do remodeling. And he's not getting offers or even a visit. In some point. Or he will rent. Or he will sell. Or he will enter in a foreclosure and tell the bank, I don't have money, I lose the money, wherever the house is yours, foreclosure. Right? When those things happen, the dollar go higher because all the central banks start to do intervention. What's happening with the dollar? Exactly what you guys have been seeing here. Higher, higher, and higher, and higher. And what tend to see with inflation, especially US Treasury yields going lower, lower, and lower. Let me put in the weekly graph, and you guys start to understand and see in a better perspective what's happening. We enter, in the note that the 20 years yields start to build like a downtrend channel. Now, again, the 20 years bond yield backtest the top line of the channel and reject, almost form a dead cat bounce. I know that a lot of people is looking for a huge inflation, but I'm not looking for that. Especially, debt, unemployment. People, society is losing by power. As soon as we start to lose by power, we start also to lose points in our credit score. Losing points in our credit score means less money. So what tends to happen with the money velocity? Going down. Right? Dollar will disappear from the economy. So Bonds yields down, dollar up. Okay? When this is going to happen, as I said, the tendency is to see next year, starting any point next year. The movement's already started. It's very clear here. This is the last, tends to be the last spike. Fabio, could you be a cup and handle formation? Of course, could you be a cup and handle formation, but it doesn't look like, because the systemically this. Okay, guys, I'm finished by here. You guys already have all the levels. We could go up to 5,850, above 5,820 by pressure. Calls are in dominance, and totally normal to see this spike in volume in pre-market at 5,820, right? Because they need to neutralize this. So it's normal to see above 5,820 calls are printing. Anyway, inflection point for the downside right now is 5,815. Market is structured to keep trading above 5,800. Okay, so eyes at 5,815. Possibility of the floor at 5,805. Okay, and the worst case scenario tends to be 5,800. 5,840 will be a small call wall, and the GX is pushing us back north. The tendency is to backtest 5,850 and reject. Guys, take care, enjoy your day, enjoy your Friday. Happy Friday, enjoy your family.